Audio's good. You're not gonna go sit there. Hello traders. Today we're gonna be talking about the Awesome Oscillator. The Awesome Oscillator was developed by Bill Williams and talked about in one of his books that talked all about the chaoticness of the market. The Awesome Oscillator was then brought into that book to pull in the chaoticness and sort of tame it down for traders to get more idealistic entries into the market. Talked about in the book, the Awesome Oscillator is based off of two simple moving averages. Contrary to other indicators though, these simple moving averages aren't based off of your close price or your high price, your typical price. Instead, they're based off of your median price. Your median price takes the high of a candle plus the low of the candle dividing by 2, giving you some point in between those highs and lows. The fact that it's based off of the median price makes it stronger in markets that have more regular movements with the candles and more regular wick sizes. If you're trading in a market that has much higher wicks occasionally, or bodies of candles, or candle size varies a lot, then the Awesome Oscillator may not be the best for these markets because it's going to slightly skew those moving averages. Pulling back to those moving averages, however, they're based off of a 5-period moving average, which is considered your fast moving average. And then there's the 34-period moving average, which is more so considered your slow moving average. The Awesome Oscillator then takes your fast moving average, subtracts the slow moving average, and then that's how it develops the point on the histogram where it's going to be plotting the value. Also, contrary to other oscillators such as RSI or stochastic, the Awesome Oscillator isn't bounded by two values. It doesn't have to stay between 0 and 100. Since it's two moving averages and just the difference of them, it can really go as high as it needs to or as low as it needs to based off of that 0 point. So now that we know how the oscillator is calculated, fast minus slow, brings us to our 3 entry points. The first entry point being our zero line crossover. The zero line crossover, if you think about it, is just a simple moving average crossover that most traders use in their day-to-day trading. If the histogram is 0, then we know that the fast and the slow moving averages are equal to each other, and that is the crossover point. So areas where we cross below that simple moving average and become a negative value is where our slow moving average becomes a greater value than our fast moving average, which is where we're entering that sell position. So once we have that crossover happen at the 0 line, we're going to be entering our sell trade. And then if we're below the 0 line, once we start crossing above that 0 line is where we're going to be entering that buy position. Once again, just as a simple moving average crossover that most traders are using in their day-to-day trading. The second entry we'll talk about are going to be twin peaks. And contrary to their name, they're not necessarily twins. One of the important aspects to keep in mind when you're trading those twin peaks is the fact that that second peak is going to be slightly closer to the 0 line than the first peak. And so the first is our bearish twin peaks, which, contrary to its name, happens in the bullish section of the Awesome Oscillator above that 0 line. We'll be entering our bearish twin peaks on the formation of the second peak. So what we'll notice on the histogram is we'll be going up, forming that first peak, forming a parabolic curve or a U-shaped curve at the bottom, forming our second peak, which will be slightly closer to the 0 line than the first. And as we start curving down towards the 0 line, we'll be entering our sell, which is why it's bearish, even though it's above the 0 line. So we'll be entering that sell position and potentially getting into the trade even before that 0 line crossover happens in the bearish direction, which is where most traders are going to be entering the trade. And so if we do catch these twin peaks, we're going to be accumulating our pips faster than most traders who are just using that 0 line crossover. Adversely, we have our bullish twin peaks, which happen below the 0 line. Once again, that second peak is going to be slightly closer to the 0 line than the first. And so what we're going to see here, we're going to see that formation of the first, forming that parabolic curve or the upside down U shape, and then forming that second peak. As we start curving towards that 0 line there, we'll be entering our buy, once again getting into the buy side before we even cross over that 0 line right there and enter the buy for 0 line crossovers. The third and final entry that we'll discuss is saucers. Saucers also come in the form of bullish and bearish, just like the twin peaks and 0 line crossovers. Your bullish saucers will occur above the 0 line and will take the form in 2 descending points on the histogram followed by an ascending point. And so we're going to see that same sort of parabolic or U-shaped curve that we noticed in the formation of the twin peaks. So once we start getting that bullish point on the histogram is where we're going to be buying. So we'll be buying as the histogram starts going farther and farther from the zero line. Adversely, our bearish twin peaks are going to be underneath that zero line. Once again, with the second one being slightly closer to the zero line than the first, we're going to be going, forming that curve, forming that upside down U in this case. And once we start to go away from the zero line, following 2 points that went towards the zero line, we'll be entering our sell since we're going farther from the zero line. The good thing about the Awesome Oscillator, if you think about all the entries we've discussed, is each entry, aside from the zero line crossover, can get you into the trade earlier than the next entry. So for example, the saucers, if we start trading that saucer, we're trading the formation of that second peak before we may even realize that it's a twin peak entry. And so once that twin peak starts to curve towards the zero line, we know it's time to exit our trade based off of the saucer and enter our trade based off of the twin peaks. Entering that trade based off the twin peaks gets us in earlier than the zero line crossover. Same thing for above the zero line. We start forming that saucer, formation of that second peak, close out as we start curving towards the zero line, get into the trade before the zero line crossover even occurs. If you found the material in this video educational and found it useful to your trading, feel free to click the like button below so more people can experience this and help their trading, and feel free to click subscribe also. That subscribe button will let you know anytime Apiary Fund goes live, so that way you'll be able to access these live videos, where you can access the recordings as well and add more information to your trading repertoire.